Prices in Australia are now rising at their fastest rate in 4 years.
Property auctions over spring hitting records to drive up house prices as investors and first home buyers try to outbid each other.
Here's the brutal truth about Perth's property market. Since COVID, house prices have surged 80%, roughly double the increase of all other capital cities combined. But here's what's even more insane. Perth now has the worst housing affordability crisis in Australia. The median house costs 8 times the median annual household income. 20 years ago, that ratio was just 5. The gap between what people earn and what houses cost has never been wider. And while first home buyers are struggling to save deposits, prices are forecast to surge another 10% to 19% in 2025 alone. That means the goalposts are moving further away faster than anyone can run toward them. This isn't a tough market. This is a complete market failure. Welcome to Perth's first home buyer crisis, where working full-time, saving hard and doing everything right still isn't enough, where an entire generation is being systematically locked out of home ownership. In this video, I'm breaking down the real numbers that prove it's worse than anyone's admitting, why first home buyers are being destroyed by this market, and what, if anything, can actually be done about it. Let's get into it. Right, let's start with the cold, hard numbers. According to the Bankwest Curtin Economic Centre's 2025 Housing Affordability Report, Perth's median house price hit $851,000 by mid-2025. To purchase a home at that price without experiencing mortgage stress that's keeping housing costs under 30% of your income, you need a household income of $100,000 to $78,360 per year. But here's the problem. Australia's median household income sits at around $133,000. That means there's a $45,000 gap between what the average family earns and what they actually need to afford a median-priced Perth home. 45 grand. That's not a small gap, that's a chasm. And it gets worse when you look at the deposit. For a 20% deposit on an $810,000 home, you need $162,000 sitting in your bank account. According to Domain's research, it now takes the median income household more than 8 years to save that amount. 8 years. In 2000, it took 6 years to save a deposit. Today, you're looking at 8 years minimum. And that's assuming prices don't keep rising while you're saving. Spoiler alert, they are. But wait, there's more. Perth's median house price has surged by 80% since the beginning of COVID. 80%. That's roughly double the 41% increase recorded across the combined capital cities. While Sydney and Melbourne saw moderate growth, Perth has absolutely exploded. And here's what makes it even more impossible. While you're trying to save for that deposit, rents are going through the roof. Perth's median house rent hit $740 a week by December 2024. That's up $320 per week since 2020. So you're paying an extra $16,640 per year in rent while trying to save. How the hell are you supposed to save faster when rent keeps eating more of your income? SQM Research's Boom and Bust report for 2025 projects. Perth home prices will lead the nation with 14% to 19% growth this calendar year. That means if you're trying to save for a deposit right now, the goalposts are moving further away faster than you can run toward them. Strategic Property Group Managing Director Trent Fleskens put it bluntly, given there has been no change in our immigration numbers and no change in our ability to build houses any faster or cheaper, there's no reason to suggest 2025 will be anything other than another strong year of property growth. Translation: first home buyers are screwed. So who's actually being locked out? Let me paint you a picture of the typical Perth first home buyer in 2025. Meet Sarah and Jake, both 28 years old. Sarah's a registered nurse earning $75,000. Jake's a teacher earning $68,000. Combined household income, $143,000. By any reasonable measure, they're doing well. They're professionals with stable jobs. They're careful with money. They've been saving since they were 22. After 6 years of saving while living in a share house and then renting, they've got $85,000 in the bank. That sounds like a lot, right? It's not enough. Not even close. For a median-priced Perth home at $810,000, they need $162,000 for a 20% deposit. They're $77,000 short. At their current savings rate, while paying $700 a week in rent, it'll take them another 3 to 4 years to get there. And by then, prices will have climbed another 15 to 20%, and they'll need even more. But let's say they look at government schemes. The new first home guarantee lets them buy with just a 5% deposit. That's $40,500 for an $810,000 home. Great! Except now they're borrowing $769,500. At current interest rates, their monthly repayments would be around $5,100 per month. On their $143,000 combined income, that's more than 42% of their gross monthly income going to the mortgage. They're in mortgage stress territory immediately. One interest rate rise, one job loss, one unexpected expense, and they're in serious trouble. And here's the thing, Sarah and Jake are the lucky ones. They have stable professional jobs with good incomes. What about the young couple both working retail, or hospitality, or trades apprentices, or a single person trying to buy on their own? According to the Bankwest Curtin Economics Centre, only 39% of renters and 48% of mortgage holders in WA find their housing affordable. That means more than half the people who've already managed to buy a home are struggling with repayments. And we're expecting first home buyers with no equity, no financial buffer to enter this market? Key workers are being absolutely destroyed. Nurses, teachers, police officers, firefighters, childcare educators, the people who keep our city running can't afford to buy homes in the suburbs where they work. A single nurse earning $75,000 can't service a loan for even a $600,000 property without going into severe mortgage stress. And it's not just about buying anymore. First home buyers are also competing against investors who are flooding back into the Perth market, drawn by rental yields of 4.4% to 4.6%, the best in the country. National investor mortgage commitments in WA grew significantly through 2024 before declining slightly in early 2025, but they're still a massive competitive force. Every time a first home buyer goes to inspect a property, they're up against cashed-up interstate investors, upgraders with equity, and baby boomers downsizing. It's not a fair fight. So what the hell is driving this nightmare for first home buyers? It's a perfect storm of factors that have collided to create the worst affordability crisis Perth has ever seen. Factor 1. Population boom outpacing supply. Western Australia's population grew by 4.2% since March 2023, with 85% of new arrivals settling in Perth. That's roughly 90,000 new people per year, flooding into a city that's only building 16,000. Ein Tunantins 800 to 20,000 new homes annually. SQM Research Managing Director Louis Christopher put it bluntly. When I look at dwelling commencements, WA is currently building at half the rate it did in 2015. There is no building surplus coming for 2025. We need 24,000 to 27,000 new homes per year just to keep up with population growth. We're building less than 20,000. That 4,000 home annual shortfall compounds every single year, pushing prices higher and squeezing first home buyers further out. Factor 2. Construction, costs and delays. Even when new homes do get built, construction delays have doubled average build times to over 15 months. Supply chain issues, labour shortages and rising material costs have added up to $100,000 to the cost of building a new home over the past 4 years. For first home buyers looking at house and land packages in outer suburbs, traditionally the entry point for FHBs, you're now paying $550,000 to $650,000 for a basic home in Baldivas, Ellenbrook, or Wanneroo. That's not affordable anymore. That still requires a $110,000 to $130,000 deposit and a household income well above the median. Factor 3. Investor competition. During COVID, many investors pulled out of Perth's market, but now they're flooding back in, drawn by those 4.4% to 4.6% rental yields. Investors can afford to pay more because they're claiming tax deductions, leveraging equity from other properties, and playing a long-term capital growth game. First home buyers are competing on a completely uneven playing field. An investor with $300,000 in equity from a Sydney property can outbid you every single time, even if you've been saving for 8 years. Factor 4. Wage stagnation. Perth house prices have grown 80% since COVID. Wages. They've grown maybe 10 to 15% over the same period. The house price to income ratio has risen to 8.0, meaning the median house costs 8 times the median annual household income. In 2000, that ratio was around 5.0. The gap between what people earn and what houses cost has never been wider. Now you might be thinking, but wait, haven't governments introduced a bunch of schemes to help first home buyers? Yes, and most of them are making things worse. Let's break down the current schemes available in WA for first home buyers. The First Home Owner Grant, a one-off payment of $10,000 for eligible buyers purchasing or building a new home valued under $750,000. Great, right? Except $10,000 barely covers your moving costs and connection fees when you're buying an $800,000 home. It's a band-aid on a bullet wound. Stamp duty concessions. From March 2025, first home buyers pay no stamp duty on properties under $500,000, with concessional rates up to $700,000 in Perth. Sounds good, except find me a property in Perth under $500,000 that's not in a flood zone or crime hotspot. They basically don't exist. The median is $810,000. The concessions help at the margins, but they don't solve affordability. First home guarantee, 5% deposit. The expanded federal scheme lets you buy with just a 5% deposit and no lender's mortgage insurance. This is the big one. For a $700,000 home, you'd only need $35,000 up front instead of $140,000. You'd save around $28,000 in LMI. Here's the problem. You're now borrowing 95% of the purchase price. Your mortgage repayments are massive. You have zero equity buffer, one rate rise, one valuation drop, and you're in negative equity. It gets you in the door, but it's risky as hell. Help to Buy 2% deposit shared equity. This scheme lets eligible buyers purchase with just a 2% deposit, with the government contributing up to 40% equity for new homes or 30% for existing homes. Income caps: $100,000 for singles, $160,000 for couples. Perth property cap: $850,000. Sounds amazing, except only 10,000 places per year nationally. You give up a percentage of future capital gains. Refinancing becomes complicated. You're basically sharing ownership with the government. And here's the real kicker. All these schemes increase demand without increasing supply. More buyers with more borrowing power competing for the same limited pool of homes. What happens? Prices go up even faster. Every time the government dishes out a new incentive, grants, duty concessions, deposit schemes, we see the same pattern. Demand spikes, supply can't keep up, and prices rise. It's whack-a-mole policy, not long-term reform. And it ends up hurting the very people it's supposed to help, first home buyers. So where can first home buyers actually afford to buy in Perth? The short answer? Further and further out. Inner suburbs like Fremantle, Subiaco, Mount Lawley, Nedlands, forget it. Median prices there are $1.2 million to $1.8 million. Those suburbs are for upgraders, downsizers, and the wealthy. Middle ring suburbs like Morley, Balcatta, Belmont, you're looking at $700,000 to $900,000, still out of reach for most first home buyers unless you're on well above median incomes. The only areas where first home buyers have a realistic shot are the outer growth corridors. Baldivers, Ellenbrook, Wanneroo, Byford, Alkimos. Even there, you're paying $550,000 to $700,000 for a house and land package. And here's the problem with urban sprawl. You're 40 to 50 kilometres from the CBD. Your commute is 60 to 90 minutes each way. You're car dependent because public transport is limited. Childcare, schools, hospitals, jobs, they're all further away. Perth already has some of the worst urban sprawl in Australia. We're now the longest city in the world, despite being less than half the size of Sydney or Melbourne. We can't keep stretching forever, but that's the only option being offered to first home buyers. And even those outer suburbs are getting expensive. Baldivers and Ellenbrook have seen 20 to 30% price growth in the past 2 years as first home buyers get pushed further out. The affordable fringe keeps moving outward, and soon there won't be anywhere left. So what's the outlook for first home buyers? Is there any relief coming? Or are we stuck in this nightmare indefinitely? Here's the uncomfortable truth. It's going to get worse before it gets better. REIWA is forecasting another 10% house price growth through 2025, which would push the median to around $891,000. That means first home buyers will need even higher incomes and bigger deposits just to get in. SQM Research projects 14% to 19% growth. Either way, prices are going up, not down. And here's the catch-22. When interest rates eventually fall, which they're expected to do later in 2025, borrowing capacity will increase. That sounds good for first home buyers, right? Except it also means more competition, more buyers, and prices rising even faster. Alan Duncan from the Bankwest Curtin Economic Centre warned that even with urgent action, relief is at least 12 to 18 months away, with rental costs unlikely to stabilise until 2026. That's for rentals. For first home buyers trying to purchase, we're looking at years, not months. The National Housing Supply and Affordability Council estimates Australia will fall about 375,000 homes, short of the 1.2 million target by mid-2029. Western Australia is falling 4,000 homes short of its target every single year. That undersupply compounds. It gets worse. Susan Lloyd-Hurwitz, chair of the National Housing Supply and Affordability Council, put it bluntly. Australia is still very much in a housing crisis that has been decades in the making. This isn't getting fixed in 2025 or 2026 or probably 2027. We're talking about a decade-long crisis, and first home buyers are bearing the brunt of it. So if you're a first home buyer in Perth right now, what are your realistic options? Option 1, accept the outer suburbs. If you're committed to buying, you need to look at Baldivers, Ellenbrook, Byford, Wanneroo, Alkimos. Yes, the commute sucks. Yes, you're far from everything, but it's the only entry point left. Use the government schemes. 5% deposit first home guarantee, stamp duty concessions, FHOG. Stack them all. Get in with the smallest deposit possible. Build equity and upgrade in 5 to 10 years. Option 2. Consider regional WA, Bunbury, Geraldton, Albany. These regional centres have median prices $200,000 to $300,000 lower than Perth. You can still get a decent home for $450,000 to $550,000. If your work is remote or you can find employment there, it's an option. Option 3, wait and save aggressively. If you can't stomach buying in the outer suburbs or regional areas, you need to save harder and wait. Cut every expense, increase your income through side hustles or career advancement, and build that deposit. But understand you're betting that prices will stabilize or fall. If they don't, if they keep climbing 10 to 15% annually, you're falling further behind every year you wait. Option 4. Shared ownership. Buy with friends, siblings, or extended family. Pool your deposits and borrowing power. It's not ideal, but it's becoming more common. Make sure you get proper legal agreements in place. Option 5. Accept renting long term. This is the hardest pill to swallow, but for some first home buyers, home ownership might not be achievable in Perth. If you're a single person earning $75,000, you're probably not buying a house here, ever. You can rent long term, invest your savings elsewhere, shares, super, other assets, and build wealth without property. It's not the Australian dream we were sold, but it might be the reality. Perth's first homebuyer crisis is real, it's brutal, and it's destroying the dreams of an entire generation. You can work full time, earn a good income, save diligently for years, and still be locked out of home ownership. The math simply doesn't math anymore. The real solutions require political courage, massively ramp up social and affordable housing construction, reform planning laws to allow medium density infill development, reform tax settings that favour investors over owner-occupiers, and actually build the 24,000 plus homes per year we need. But those solutions take years to implement and decades to fully resolve. In the meantime, first home buyers are left with impossible choices. Buy in the outer suburbs and accept a 90-minute commute. Move to regional WA, wait and hope prices stabilise, or give up on home ownership entirely. This is the crisis. This is the reality. And unless something changes, unless we dramatically increase housing supply, reform planning, and make home ownership accessible again, an entire generation of Western Australians will be locked out of the property market forever. I'll be covering Perth's property and rental market every week, breaking down the data, exposing what's really happening, and demanding accountability from decision makers. Subscribe so you don't miss the next video where I'll be diving into the 5 Perth suburbs that are about to explode and why investors are already buying before prices surge even higher. If you're a first home buyer struggling in this market, you're not alone. Hundreds of thousands are fighting the same battle. Stay informed, know your options, and keep pushing for change. Because the current system is broken, unsustainable, and frankly un-Australian. Thanks for watching. See you in the next one.